A quick detour because we've got a guest on this BOJ decision. So a quick view from Anuj Gupta. He's head of commodity and currency at HDFC Securities. Joins us right now for his quick perspective. Anuj, good having you. Thanks for joining it. Good morning. What do you believe are the implications of the BOJ move?
See, after the 17 years, they increased interest rate from minus 0.1% to 0%. So basically, they ended this yield curve to control the policy, and I think this is a positive impact on the Bank of Japan. So possibly, the interest rate will put some pressure on other currency. Might be, you can say, we are expecting some depreciation in USD INR. Possibly, we are expecting the rupee may depreciate a little bit towards the 83 levels.
Sorry, did I hear you say you believe the rupee would kind of settle at the 83 levels to the dollar?
Yeah, definitely, because when the Japanese yen is strength, I think possibly rupee may depreciate, and rupee expecting to depreciate further. However, dollar index is trading around a 103 levels. And dollar index is also waiting from the Fed policy, which comes tomorrow. So possibly market may be very volatile in terms of the currency segment, and possibly due to this expecting some little bit depreciation in rupee. However, recently we saw appreciation in rupee in last 15 days, but now market is awaiting also for the federal bank policy. Possibly due to this, we'll see some volatility in the rupee. However, yesterday we saw some depreciation in rupee, possibly expecting a depreciation in USD INR, and it may test 83 to 83.10 levels.
Anuj, I want to talk to you specifically about the dollar yen, because I know with the yen borrowing that happens, a number of corporates in India either go out and hedge their exposure in terms of their ECB, or you also have structures that are long dated in nature with knock-ins and knockouts, considerably lesser now than it used to be a decade ago. But where were positions as of yesterday on the dollar yen on the cross-currency side with a lot of the banks and corporates? And also, secondly, what will this now do for hedging cost?
I think now the hedging cost will increase because earlier interest rate was in minus, and right now interest rate are at zero. So possibly the corporates who are hedging the position, possibly the little bit, it will be costlier to the hedgers who are hedging with the dollar yen, because right now the interest rate are zero, and actually Bank of Japan is now yielding curve their policy. And this will impact on the the hedger side, and this will be costed to the corporates.